Hey everybody, how's it going? Peter here. I'm gonna make this a quick one. Soybean spread, commodity spreads. How well are they? How do they work out? People ask us that all the time. They think just trading the equity markets is the way to like a day trade and make a living, whatever. I have my sim account set up here from Futures Plus. There's a lot of account numbers all over this thing, and so I'm gonna use this. I still use simulation, by the way. Till today, I use it in addition to my real trading because I'm always testing out stuff. If I'm out of a market for a long time where I haven't touched the market and I just want to get my feet wet again, I'll do a series of trades in that sector and indoor strategy that maybe a member has an idea of until I get comfortable with it myself before I put my real money on the line. Okay, and if you don't do that, you must have a lot of money to waste. We're looking at the November versus March 21 calendar. I had got in this. We use season algo as kind of a way to get into trades, just set up. Okay, so it's like our phase one setups is we'll have seasonal trading just to start. Okay, when I first started doing this, I was teaching people just seasonal. It doesn't work just that way. We had to start adding technical, and now we have different variations such as 1, 2, and 3 deviation, high channels spreads because that's what most spreads do, right? They have a thing called full carry. I'm not a full carry expert, but we know when they deviate and they're far out, they're usually at full carry levels, minus 10s, 15, 20s on grains, etc. Not to get too technical here, I want everybody to know how simple it is to trade spreads. I have an hourly chart here of the same contract I was in that I got out yesterday, and just a small little scalper. I made it's called a cent and a half. Now I don't make a cent and a half, but these things move by cents, and a cent and a half is equivalent to 1 cent, 1 point basis is $50 a point. Okay, in the futures commodity grain markets. So in this case, actually I just made a tick over a point because I only made $62.50 for every one contract, and it cost a $330 overnight margin to hold this thing. So 24/7, you're trading this thing instead of spending over $1,000 on margin for one contract, and you can make about the same moves. And the cool thing is spreads trade with a lot more volume. They also trade and trend a lot better than even their outright components. Now, don't get me wrong. You will go through chop zones, but you just, here's like a ribbon trend trade example I have, using 40 Traders strategy number 2, trend finder. Now I found this late. I literally just found this on Friday. I've been working on algorithmic projects for about 5 months. Away from that, I'm talking back to the point. How do we really got in this trade? We're looking at 150 constant volume candle bar. So once we've identified our hourly is on a good downtrend, which has been on a downtrend since April on this soybean spread. Oh shoot. Yeah, I'm on the right. I'm sorry guys, I thought I was on the wrong one. November versus March. So then I will look for just shorting opportunities, and I'm looking for shorting opportunities anytime, because these long opportunities here when the daily charts are short are usually short-lived. Here you see we went sideways chop and we went short again. Here we went a little bit up, but then we went short again, and we went short for a good long time. So you want to always just maybe look at the overall daily, come down into a constant volume bar, which we use here at Futures Plus Trade Station, which is basically the trading technologies platform, and it's all web-based, super amazing site platform. Excuse me. And I got in late, got back in the game here about 8.6, just over 8.5 cents. And what I was seeing here yesterday when we opened up on Monday, we made a nice pull down, and I was up like, about it's over a cent, which was like about $62.50, right? For one contract, one simple contract. Got in on Friday, $330 came out of my account to hold it, and the next day basically capitalized 20% on that margin. So, I saw this. So I had drew this first line, and we hadn't broke down here, and we broke down the first one, and I was holding like just before 30 minutes, gosh, maybe even 15 minutes before soybean market closed, with fear that we will have a pullback today because we've had 1, 2, 3 times, 3 separate days This is actually maybe one whole day here. Yeah, it was. And then another day here, 1, 2, 3 attempts at trying to break this minus 10s, which, you know, in the commodity world could be already 50% level of full carry. So I'm like, we have a couple of things here. Should I just get out and at least take my profits? Of course, today market's turned around. Now, it could be short term and short lived, but at least I took off 20% for every 330 bucks I put out. So that's an amazing return. Put it on Friday afternoon and picked it back out on Monday. You know, now I wanted to give you guys the math because some people think, well, he's showing small numbers is not impressive. Okay. One, let's clarify this. I do that because I don't lie to people. Spread traders can trade a lot of volume. You can make a lot of money with least capital efficiency. Least capital out of pocket. Why? Because the board gives you guys a lot of credits for hedging spreads, for taking on two positions of the same market. This is a simple, not a complex, a very basic, simple calendar spread. And because you're hedging the same product at just a different month, your risk goes down. So instead of, you know, you can get up to 90-95% sometimes margin discounts from the brokerage, you know. And in addition to that, look at the volume. You look at any outright market and stuff. Now, soybeans outright, they can get pretty heavy, like liquid too, like this during the day. But these are just really heavy markets, and when they trend because there's a lot of commercials in here. They are speculators too, but they're not in here playing games like in the indice markets. Bottom line, there's a lot of game players, too many algos playing with each other back and forth and psyching each other out, while like one or two quants are making like $5 zillion a year just to screw you out your emotions. You can come in here and basically say, okay, let's talk about the value. Oh, Peter, it's only $62, but we're talking for a speck of that move. So we follow this religiously and do this professionally, and every time came in here on these 150 constant volume bar, which is a more microscopic way to look at it. It's, you know, it's like using a 1 minute time frame. After we look and confirmed that the higher time frame, you know, it's short, when we're just taking shorts, then, you know, you can come in on all these pullbacks. And like, for example, let's just look at this last move here. Had I been more responsible and caught this, it wasn't stuck on another project, you have around the 17th of August, which was last Monday, up until this Monday. Now, you could have made this whole move. They say, oh, how do you call the top bottoms? You can't all the time. This one was a little bit more realistic because we had visited this area before. So with that said, it's easy to maybe say, once we broke with our trend finder tool here, which is a bunch of moving averages exponentially calculated, that from, you know, about Monday, August 17th, to about the following Monday, in 1 week's time, you could have made a whole move of about, let's say, 5 cents. Okay, so 5 cents, that's 5 points, and each point on grains is $50. That's $250. Here's the cool thing. Because this thing, so now you're talking almost 100% on per margin of return. Okay, now, because we're talking about the fact that there's so much volume in these things, you know, you can go unnoticed with 10 contract. If you had the money, if you had maybe a 10 or 20 grand account and you're a little aggressive and you play, you're a spread trader, you've already been doing this, you could have been in 10 contracts. That's $2,500 basic. It's $2,500 in a week from one Monday to another Monday. You might have been holding total of 10 days. Okay, because one weekend went in there too, right? Here's the time. Here's August 17th. You would have been pulling out today. I went in on Friday. I pulled out $62. Real simple, quick trade for every contract. But had we caught this the week before, right? And don't say hindsight, guys. A lot of haters and shit say hindsight out there. You can do this all day long on these spreads. Okay, you just gotta be focused. I have focus issues too. That's why I haven't been pulling some of these big spreads. You don't have to be all fancy, okay, and finding complex 8-leg spreads. Okay, you can do this. Why? Because yes, it is a little bit more pricey. So let's do the math there too. But let's look at the peace of mind. Okay, you go on this thing, every time it breaks, you have maybe a simple trend. Our strategy at Forte Trader, we have a second strategy called the Trend Finder strategy. So assume you use the Trend Finder strategy and this thing broke and you got in quick enough. You're aggressive, you got in on Monday. And you had a target here because you've seen this price visited this area before. Plus, carry prices make sense. So after you've been doing this a while, you'll know that. So you'll come in here and let's say, yes, it's 2 contracts you're buying and 2 contracts you're selling times 10 of those, right? On average, let's just say over where we are at TradeStation, if you don't have any special military discounts or some other kind of special whatever have you, it's $1.50 plus exchange fees. On average, it's like about like $3.25 each contract each way. So 2 ways, $6.50 times 2. You might be about $13 with 10 contracts. Now you're gonna say, well, I'll just go TD Ameritrade. I'll do one option for 50 cents and wait and try to see how many of those times do those options work. Because a lot of people aren't using the right math on that too. There's a lot of math there. So if you did this right, trust me, for the dollar cost for what you're spending, you put up $3,000 in margin, you get 10 contracts, and you turn around and you make $2,500, practically almost 100% on your margin, okay, that you put up. So you're talking about making money on capital efficiency. And you spend from that $2,500, you spend, $130 in commissions, and you have a total net in a week of $2,300 over that almost $2,400 in your account in 10 days, but 1 week full of business day, right? Monday to Monday. Done. Now, again, you're not the only kid on the block. There's all this volume here. You're going to be up in this trade. You can go and scale in whatever, and you can scale in because these things move slow. They give you time. So if you think you need to be like a ninja, you can. But again, coming in even maybe 5 lots and 10s, look at this market. So it's just a simple way, an opportunity for you to make money selling future spreads or buying future spreads, whatever, just basically transacting in that market and then just scaling up on the fat, juicy ones that are more forgiving. And you can do it, guys. I mean, I'm giving you the numbers and everything right here. This is what we do. It's just simple stuff we find. We don't overcomplicate stuff. If you have some basic futures experience, it'd be wise you to come check us out. Come to fortetrader.com, check us out. I don't want to make this too much of a promo, but I can help you with it. We don't overcharge and we don't overeducate either. We don't get too crazy. Keep things simple, and you can pretty much self-manage yourself. Have a different way to make money in markets that you don't have to know anything about. You don't have to know about soybeans. You don't have to know about wheat. You don't have to know about hog. You don't have to know about cattle. None of that BS. You don't have to get reports and read them. I don't care about them. I mean, some people feel good about it. I'm not going to diss them. You want to read reports, read reports. But I don't want to waste my time in that stuff. To me, getting out of a trade because of a report means that maybe the trend changed. This could have been a report. Okay, so we keep it simple this way and doable for everybody. I keep very basic English in it. Don't get all complex. I don't like the guys that get all trying to show off with their words. And this is the way you could make money. Another opportunity making money with future spreads. We have promos right now where basically, let me even show you guys. We have promos right now. If you are interested, you can join us for only $297. And the cool thing is you can get all that back in commission credits because we're partnered with TradeStation. So we have a 100% rebate program too right now. So if you sign up, then you sign up through TradeStation. They won't just give you your $300 back, but after you're done taking the series I have here, and you get your platform, you'll have one of these. You can sim trade with us. You'll have a free Discord group for life. As long as I'm alive, it is open. Then you can basically come and join us, ask questions, do screenshots, practice. You may have to just add another tool that we ask you to get. We highly recommend that helps you with seasonality, which is one of the first steps you start learning the product itself, or basically, coming from futures into a future spread market. It helps you understand the market structure of spreads. Helps you understand the real, true background of the futures markets by getting into spreads. So once you do that, you kind of get into learning our strategy 2 and strategy 3s, where they get a little bit more advanced, but nothing too fancy. And you do that with us, and you have nothing to lose. and everything to gain. Of course, by law, you got to say, risk capital, use only money you could afford to lose, because this is the trading world, and we have to disclose these market disclosures here. You can pause and read that, but it's a really good opportunity for you to come in and check out different ways to trade like a pro, and you can do this part-time. You don't need to be behind the screens all day long. This is a part-time thing, and a lot of champions right now in World Cup Traders Championships have won with this style. They don't talk about it much, but lately they've been coming out and saying it. So, you want to trade like a pro, this would be something that you should consider really highly. If you don't do it from me, guys, I understand. I'm not going to say I don't care. Just go learn it from somebody. Okay. All right. I'll talk to you guys. Thanks for watching.